Travis Lane here. I recently did a series of videos on US healthcare, why it's so expensive, and what can be done to fix it. But in the meantime, I want you to get the absolute best deal that you possibly can on your current health insurance plan, whether it's offered to you by an employer or whether you're searching out on the public market. To help with this, I've created an Excel template to help you visualize and understand the details of your healthcare plan and pick the best one for your scenario. I know it's saved many people thousands of dollars already, and it could save that much for you too. This is primarily a tutorial on how to use the tool, but I hope that it's interesting and informative on its own right, in helping you understand how health insurance plans work, what some of the key differences are, and making sure that you're getting the right one for your situation. And with that, let's get started. Okay, here's how the file will look when you first purchase and download it. I left some sample plans in there just to show it filled out, but we're gonna recreate that so you understand how to get your inputs in the right places. It's actually pretty simple, I hope. You only need to interact with the yellow highlighted cells. Everything else is for calculation, reference, or visualization. To compare health insurance plans, you only need a few key parameters: the premium amount, the annual deductible, the out-of-pocket maximum, the co-insurance rate, and any employer contributions. For example, if your company contributes towards an HSA or FSA as part of your benefits package. If you're choosing employer plans, you may be given the premium as a per paycheck value rather than a monthly. What matters for this tool is the annual number, so feel free to adjust the paycheck schedule and premium to match your situation, or just fudge the numbers however you need to make sure that the annual premium matches the amount that you will pay on your plan. So let's clear the sample inputs and find some new plans to compare. Now, as a quick note, if you are shopping for real, make sure to put in as much information as you possibly can on the front end. In particular, you want to put in all of the prescription drugs that you take to make sure that they're covered by any plan that you would even consider. I went to the Affordable Care Act website at healthcare.gov to pick some sample plans just for our comparison here. But this is the first point of learning. There's really only three shapes of health insurance plans. Let me illustrate what I mean. First are low premium, high deductible plans that are typically the cheapest plans available. They'll cost very little month to month, but will end up costing a lot out of pocket if you do encounter big medical expenses. These plans are typically for healthy people who only want coverage against catastrophic illnesses or accidents, though they can carry quite a bit of risk if those things occur. These plans tend to look like a ramp. They have a low annual value because of the tasty low premiums. Then there's a portion that rises linearly. In other words, every dollar of medical cost means a dollar of cost to the plan holder. This is during the large deductible period where insurance is not really doing anything. After hitting the deductible and/or out-of-pocket maximum, which for these plans are frequently the same thing, the cost levels off as insurance covers expenses beyond that certain point. Next are high premium, low deductible plans. They're sometimes considered the luxury or Cadillac plans as they tend to cover everything from the start. But the reason for this wide coverage is that you guarantee you will spend a significant amount on healthcare via the premiums. You won't feel the sting of a deductible, but you are guaranteed to pay a high amount for your healthcare simply due to the cost of the plan. These plans look like a plateau. They have a high starting value because most of the cost is carried by the high premium, and the costs don't increase by much, if at all, with your usage. And then there's everything in between. The wide array of plans between the cheapest and most expensive options is very diverse, but all the plans share some common features. They all have a monthly premium that you're guaranteed to pay to participate in the plan and have coverage. They all have a deductible and an out-of-pocket maximum. Plans here are much more likely to have a different deductible and out-of-pocket maximum value than the cheapest or most expensive plans. Between these values, there will be a co-insurance rate where insurance pays a portion of each bill and you pay the remainder. These plans look like a crooked corner. They'll start off with the premium, usually higher than the cheapest plans, then we'll have a linear portion during the deductible window, a flatter linear portion during the co-insurance window between the deductible and out-of-pocket maximum, and finally plateau off after hitting the max. I've selected one of each plan for our example. The first one, which we'll call the Bronze plan, has a $34.34 monthly premium. It has an $18,200 deductible and an $18,200 out-of-pocket maximum. There is no co-insurance rate, and at least to start, we'll assume that you're not getting any credit here. The second plan, which we will call the Silver plan, has a $429.29 monthly premium. It has a deductible of $11,400 and an out-of-pocket maximum of $14,800 and a 50% co-insurance rate after the deductible. Finally, we have the Gold plan, which costs $742.02 every month, but has zero deductible and a $10,000 out-of-pocket maximum, along with a 30% co-insurance rate. Now, the last thing you need to do is estimate your medical expenses for the upcoming year. And this may sound daunting, but don't overthink it. If you or your family are generally healthy and don't regularly require medical care, pick a low-ish amount, say $2,000 to $5,000, just to account for a year's worth of unknowns and regular doctor visits. If you anticipate minor procedures or have conditions that require some level of regular oversight, you may pick a medium value somewhere between $5,000 and $15,000. And if you have chronic, terminal, or serious conditions or are expecting to require major surgery or hospital time, pick a high value, $15,000 to $20,000 or even beyond. As you pick your value, you should include prescription drug costs in your calculation. Again, to the best of your abilities, try to put in your prescriptions to make sure you only consider plans that cover them if possible. Now, at this point, the tool will tell you which plan will cost you the least amount for the year, given the information you've provided. It will add up the premiums, any of the out-of-pocket expenses you will bear at your expense level, and subtract any incentives like HSA or FSA contributions that reduce the cost you bear. However, before finalizing your choice, you should look at the graph. The graph is going to show you the shape of the plan options that you input. What you might find is that a cheap plan is just slightly cheaper than a more expensive plan on the low end, but carries a massive risk at higher expense levels. You might find that a more expensive plan that feels better because you don't have a deductible is actually never the most economically efficient, even if you have super high expenses. Let's make up some numbers to illustrate these cases. Here's an example of a cheap plan that is technically the lowest cost for this person. But in a best case scenario, they're only saving a few $100s a year. If something goes wrong, they're risking tens of thousands in extra net expenses. This person may choose the slightly more expensive plan to protect against the massive risk. Here's an example of a plan that is so expensive in premiums alone that it is never the right choice versus the other plans, whether you spend nothing or have 15 invasive surgeries. Going back to our original example, we see a bit of a complex situation. The bronze plan on the green line is the cheapest at very low expenses and very high expenses, but is not as economical as the gold plan, represented by the orange line, in an intermediate window. In this case, there's a judgment call to make. If you believe you can precisely predict that you'll be in that window, the gold plan on the orange line is what you should choose. If you're not precisely certain, or you want to take a chance on big savings, you may choose the bronze plan on the green line. If you're having a hard time deciding in one of these more complex cases, you should look at some extremes. What is the maximum amount of savings and the maximum amount of risk? To find this, you can look at the points on the graph where the biggest gaps are. In our example, the biggest gap where this plan is better, the difference is $18,600 versus $14,450, or about $4,000. But the biggest gap where the other plan is better is a difference of $9,000 versus $400. Choosing the bronze plan on the green line has a maximum risk of $4,000 and a maximum savings of $8,500. And one last thing to consider before choosing: your savings and your personal financial responsibility. Earlier, I talked about high-cost plans that never make sense at any expense level. From a classical economics perspective, these plans are useless. However, that doesn't mean they're for nobody. If you have a difficult time saving money or don't have access to an HSA to help offset surprise deductible payments, you may still opt for a more expensive plan to keep your expenses steady, if high, and avoid having to dip into savings or utilize credit in unexpected situations. You just want to make that decision intentionally, rather than off of a whim or an impression. As one final disclaimer, this is not to be considered professional financial advice, and any decisions that you make are your own. And that's it. I hope this has been a helpful and informative guide to you, whether you decide to purchase the tool or not. If you would like to purchase it, there is an Etsy link in the description below. You can also help out completely for free by sharing, liking, commenting, or subscribing to my channel to get more interesting and occasionally helpful content like this. Until next time, this has been Travis Lane, making important things make sense.